Hi traders, Chris from the research team here at Pepperstone. Now, a few hours ago, we saw the Aussie Q3 CPI numbers coming out, and they were pretty dark, pretty sinister, and very telling indeed. And they'll throw some conjecture as to whether the next move from the RBA could actually be a hike in 2026. It certainly poo-poos the idea they're going to be looking to cut rates anytime soon. Of course, what we've seen today is that the Q3 headline numbers, CPI numbers, have come out at 3.2%, which of course is a big bounce from what we saw in Q2 at 2.1%. Now, the trim mean measure, which of course the RBA looks at very closely, extrapolates some of the more volatile areas within the basket, has come out at 3%. So right in the top echelons of that target band, that's the highest levels in 18 months. And if you go into the components, goods and services and various elements around that, every single element of price pressures rose from Q2 to Q3. And if you look at the monthly instalment for September, which we got, the first monthly instalment, which will feed into the Q4 CPI numbers, which come out on the 28th of January, an absolute date for your diary, because that's going to be very telling, and that will be where the conversation about rate hikes potentially could come onto the cards, depending on the outcome there as well. But certainly the RBA are expecting some pullback in that Q4 numbers as well. But if it doesn't, that's where we're going to be having a bigger talking point and the tide may be turning. Now, of course, what we're looking at here is a situation where the RBA were expecting the trim mean number to come out 0.6% quarter on quarter. They said, Michelle Bullock said, anything above 0.9% would be a material beat to those expectations. And so at 1%, obviously, we've got that material beat. And the fact that the RBA are not too concerned about the unemployment rate at 4.5%, given they're talking about labour supply and the participation rate, you can understand why the rates market has pulled its probability of a rate cut for the 4th of November from around 40-odd%, 60% on Friday, down to a lowly 6%. So the market's saying we're not going to get a cut. It's a very low probability given this inflation print. It'd be silly to cut in this situation. And they've pulled down the expected cuts throughout the curve to get a terminal rate now of 3.35. So they're still saying on balance sometime next year we could still get a 25 basis point cut, but that's still a bit of a moving target, and we'll see what happens. Now, the reaction in markets has been quite prolific. We've seen a 13 basis point rise in 3-year government bond yields. The Aussie dollar's rallied against most currencies, although it's not been overly prolific. And you've seen the ASX under pressure with the industrials and banks and healthcare stocks under a bit of pressure there as well. But what we're looking for going forward, of course, that CPI number in January is going to be very, very important. But the next employment print in Australia could be key as well on the 13th of November. If that was the unemployment rate was to pull back a little bit, obviously some of that rate cut pricing throughout the longer end of the curve will come out of the market. We've got wages on the 19th of November. We've got the Q3, we've got the next CPI instalment on the 26th, and the Q3 GDP numbers, which could build from where they were before, and household consumption continue to rise. So we've got a situation where the platform is steadily rising for growth into 2026. Inflation's above the target in most capacities, and it's definitely a situation where the RBA need to hold. How does this go down? Trade at Pepperstone.